My name is Jake, welcome to the channel. In today's video, we're gonna talk about the simple path to wealth with dividend investing. Now, I've been talking about this for the last 2 years. It is my preferred way to invest if you're trying to live off of your dividend portfolio. The simple path to wealth with dividend investing will help you get there. Now, this was inspired by J.L. Collins, and instead of investing in the total US stock market and living off of your portfolio by selling your shares, I adopted what J.L. Collins shares in his book, The Simple Path to Wealth, and I talk about living off of my dividend portfolio, but still keeping your portfolio very, very simple. So this video, I'm not going to tell you the best 10 stocks to buy. I'm not going to tell you any of that kind of stuff. What I'm going to share with you in today's video is I'm going to walk you through how to think about your dividend portfolio, how to think about projecting future returns. I'm going to get really, really nerdy. So I'm going to talk about percentages. I'm going to talk about different portfolio mixes. So for example, I'm going to talk about, a comparison of SCHD and DGRO versus VYM and VIG versus the S&P 500, but mostly focusing on the income aspect of your portfolio. And then at the end of the video, I'm going to go into my dividend reinvestment calculator that I share for free, and I'm going to walk you through how to look at this. And many years ago when I was pursuing FIRE, that was the most exciting part for me, was playing around with a dividend reinvestment calculator and projecting how long it would take for us to be able to reach financial independence and one day live off of our dividend portfolio. And that's exactly what I did. At the age of 37, I retired from my 9-to-5 job and I'm living off of my dividend portfolio. I also create YouTube videos on the side, so I achieved what is called Barista Fire. So I'm still working on the side. I make YouTube videos. I make a little bit of money, which helps pay for our expenses, in addition to the income that we get from our portfolio. And the portfolio that you're seeing here on your screen, this is my M1 portfolio. And so yeah, I've been documenting this for the last 5 years. And so if you're new to the channel, that's a little bit about me. But yeah, there's a reason why I always talk about having a core and satellite approach to your portfolio, because if you're just investing into individual stocks, it can be very stressful. It's not really a sleep well at night approach to dividend investing, in my humble opinion, right? My opinion, it's been my experience. If you're just a normal person and you're trying to build a portfolio, I'd highly recommend considering, the core and satellite where you're investing into ETFs, individual stocks, because retirement should not be stressful. And if you're only invested into individual stocks, it can be really stressful. And it could look a little like this.
You know what? Six shot?
Six shot.
Yeah, I like six shot.
Thumbnail, bro.
Just hop on it. Hop on it.
No, yeah, I don't think I'm gonna float.
You're gonna float.
No, get me out. No, give me out.
Let's go. You got the life jacket on, man. You're good. You're good.
No.
You're good.
You're floating.
You're good.
No.
You're good. You're floating right now. Now hold on to the fish. He floats. There you go.
No!
My gosh. Yeah, anyways. I just always imagine some random person just sitting at home watching that and just like, what did I just watch? So if you're new to the channel, welcome, and enjoy the ride. Oh my gosh. All right, so what we're going to do is I want to walk you through a few things. I want to walk you through this portfolio visualizer tool, and then I'm going to take a look at the reinvestment calculator. I'm going to kind of walk you through some things and help you understand how to, at least how I view this in terms of income versus growth and when you're looking at your portfolio. So this is a really, really great tool, guys. Portfolio Visualizer. I'm not sponsored by them. No affiliation. I use their free version. They have a great tool when it comes to back testing your portfolio, and you can build out different portfolios. And I'm going to walk you through how to do this. Okay. And so I've shared this on the channel in the past, but essentially what I'm doing is I want to take a look at 3 different portfolios. I'm going to look at SCHD, VYM, VIG, and the S&P 500, so VU. And what I want to do is I want to backtest and compare how these different portfolios have performed, but there's a new feature to Portfolio Visualizer that was not there in the past, and that is you can break it up and show the income. This is not something that I've seen on their website in the past. This is a new feature, at least new to me. I've not seen this in the past. And so you can see how much income the portfolio generated, and you can also see the difference in the return from with the dividend and without the dividend. And this will help when we're using the dividend reinvestment calculator that I share. So in these 3 portfolios, the first one got 50% SCHD, 50% DGRO. And this is, what I call the simple path to wealth. Now, you could go in and you could add, additional individual stocks or, covered call ETFs, but just your normal person, if you're brand new to investing, I think starting out with that, I think is a great place to start. And as you get closer to, your goals in terms of like understanding what you're investing for in your time horizon, then you can adjust the percentages. But if you're a brand new dividend investor, I think this is a great place to start and to get you off the ground. Okay, another portfolio that you could consider, because not everybody wants SHD and DGRO, that's completely fine if that's what you want to do. I personally like it for many different reasons, and you can check out my other videos on why, but we're going to compare it with VYM and VIG. This is just a mere example. I'm just showing you different examples of how you can look at this, and the S&P 500. Okay, now if you're doing this yourself, you're going to want to go into the settings. This is very important, is you're going to want to, depending on your situation, if you're living off of the portfolio today, or if you're reinvesting the dividends, when I'm doing this, I put in no rebalancing. And for this sake, because I'm living off the portfolio, I'm no longer going to reinvest the dividends. And yes, I want to see the income, the dividends displayed. Okay, so make sure that you do the settings if you're going to use this. Once again, the website is portfoliovisualizer.com. And then what we're going to do is we're going to analyze the portfolio with dividends not reinvested and no rebalancing. Okay, so once again, this is without the dividend reinvested. The return of just the share price or the capital appreciation is 7.9% with SHD and DGRO. Very similar with VYM and VIG at 7.5%. And then VU, the S&P 500 blows them both out of the park with a 10.8% return here, but this is without the dividend. Okay, so this will look a little bit different. Let me just show you really quick with the dividend reinvested, so you can kind of compare and see what the return would look like. So you got 11%, so up from 7.9. It's 11% with the dividend, and this is annually, right? By the way, and then VYM it's 10%, and then VU it's 12.8%. So the S&P 500 has been on a tear. It is outperforming both of these portfolios on a total return basis. So now this video is more skewed towards investors who are income investors, those of you who are trying to live off of your portfolio. Okay, so we're not looking to sell our shares in early retirement. It's an entirely different strategy. Okay, and so I'm not making the argument in what's the best investment approach in terms of total returns, because here's your answer. If you just care about total returns, go invest in the S&P 500. Okay, but if you're an income investor and it's a different approach, a different strategy, then that's who I'm addressing in this video. Okay, so that's with the dividend reinvested. But for this purpose, what I want to do is I want to look at the income. I want to focus on the income of these three portfolios. Okay, so the total returns without the dividend, you can see it here. And this is with a portfolio, like say, for example, you are nearing retirement and you had $1 million portfolio. I know many people are not going to have that, but just humor me, just to, let's say, you reach retirement and you have $1 million, okay? Or you have $500,000. This number doesn't really matter, but it's just so, it doesn't really matter. But I'm assuming you're retiring and you are living off of the portfolio. And so what I want to look at is I want to focus on this right here. This is a new feature here in Portfolio Visualizer that I've found. Maybe it's been around for longer, but I haven't used this in the past. So this is new to me and probably new to many of you out there. But you can see here the income of the three different portfolios and how they've grown and how they've differed. So this part of the video, we're going to be backwards looking. Towards the end of the video here in a moment, I'm going to focus more forward looking and kind of, connect the dots and help you to kind of see both sides of this. Because, historical returns are great. That's awesome, Jake. But, what about now? How do we look at this going forward? So I'm going to show both sides of the coin here. So you can see here in 2015, SHD and DGRO combined at a 50-50 allocation produced $26,500. VYM and VIG produced $26,800, and VU produced $20,900. So that's in 2015, and you can see on the chart here that it's gone up every single year. And then we're not going to look at 2024 because it's not over, but let's look at 2023. In 2023, the portfolio produced $58,100. in SCHD and DGRO, and VYM and VIG produced 45,000, and VU produced just under $34,000. So that's really cool, but I want to look and see, well, what percentage does that represent? So let's take a look at that next. So if we take a look at this with a percentage increase calculator, the starting value of SCHD and DGRO from 2015, comparing that to the growth in 2023, you have just under 119% increase in just that short span of time. That's absolutely incredible. That's really, really impressive. And we're just looking at the income. So since 2015, your income increased almost 120% up into 2023. Now, if we compare that with VYM and VIG, they only increased their dividend, just the income, by 68%. So almost half that of SCHD and DGRO. Just comparing that with the S&P 500, the S&P 500 has grown since 2015, the income or its dividend by 62%. So you can see here, of the three, the clear winner is DGRO and SCHD. The next thing that I want to take a look at is I want to look at the income year over year. So if you're a dividend investor, this is right here. So I'm going to zoom in on this and I want to take a look at this. So let's take a look at the income of these three portfolios. With SCHD and DGRO, you can see that the income has increased every single year. Now you compare that with VYM and VIG, every single year the dividend increased. Okay, some years faster than others, but every year increased. Now the difference here is with the S&P 500, the S&P 500 is not an index that you plan on living off of the income. Now, I get a lot of people that say, yeah, Jake, well, why don't you just live off of the dividend from, this S&P 500? You can absolutely do that if you're a multimillionaire, okay? If you're a millionaire and you have multiple millions invested, you could probably do that. But for the rest of us, it's probably not going to be feasible because the amount that you need invested in the S&P 500 is just going to be too much, and it's not going to be feasible for most people. And you can see that here in the dividend. The S&P 500 is not a dividend index. It's not designed that way. It's not screened that way and filtered that way. So when looking at the income from the S&P 500, you can see here that it increased its dividend every year except in 1 year. In 2020. Now we know what happened in 2020, obviously, but you can see here the others increased their dividend. And even SCHD and DGRO greatly increased their dividend in 2020. Okay. And so these ETFs, yes, the total return is lower, but it really depends on what type of investor you are. If you're prioritizing income, well, then you probably want to skew your portfolio more towards investments that are income focused. The S&P 500 is not an income ETF, okay? So it's really, really important that you understand that. So now what I want to do is I want to take a look at this and I want to take the data that we just looked at here in Portfolio Visualizer and I want to implement it here in a dividend reinvestment calculator using a few different assumptions and a few different scenarios. Now this is a calculator I created and you can use it for free. There's no paywall. You don't have to pay anything. When I created this calculator, there was a few on Patreon, people that were charging money. I wanted to make this free. I made it. You can use it. You can repurpose it however you want. And what you have to do is just go in here. You'll need to make a copy in order to edit it. So you go into here under File, make a copy, and then you can edit it. Don't click, share request because that won't work. You have to make a copy. Okay. And so yeah, this is for free. I have different scenarios down here that I'm going to share, and I've shared other things here that I've made, on my channel before. Like for example, I have a dividend glossary. I have, portfolio modeling, really nerdy stuff. I have rebalancing in the future. I have a 50-year one. And so I'm going to walk you through this here. And I want you to see, some different things that you can take a look at. In order for this calculator to work, there's a couple of things that you want to take a look at. First, you want to look at what is highlighted here in yellow. That is all you need to update. Everything else will update automatically. And you'll see here down on the bottom, you'll have different tabs. This is with the dividend reinvested. So this is a 30-year time horizon, and it's assuming that you're reinvesting your dividends, and it's assuming that you're adding new money to the portfolio. That's one scenario. Another scenario that I created is, let's say, for example, you're 30 years old and you want to retire at the age of 40. Well, what you're going to do is you're going to add add to your portfolio up until the next 10 years. And then in 10 years, the shares will not change. So, but the dividend is going to continue to grow and the portfolio value will continue to grow. So this is living off of your portfolio in the future. And if you wanted to change this, all you'd have to do is, say you need 15 years. Well, you can update this, and instead of 10 years, you do it in 15 years. So this is another scenario, another calculator that you can use. The other one here is if you're retiring today, you have the money, you're no longer reinvesting the dividends, and you're no longer adding new money, new contributions to your portfolio. This is the calculator that you will use, living off of your portfolio today. So I'm going to focus on this one here and the living off of the one today. So, and I'm going to walk you through how to use this and how to look at this. Because Portfolio Visualizer now distinguishes with the income, with the dividend, you can capture these numbers so much easier. Before you had to go over and you kind of had to, do it yourself, calculate everything yourself. Now, if you use Portfolio Visualizer, you can do it 10 times faster. Okay. And I'm going to walk you through how to do that very, very quickly. So in order to get the data that we need for the calculator, what we're going to do is we're going to go under Edit Portfolio, we're going to go under Settings, and we're going to do Reinvest the Dividends. We're going to turn that back on. Okay, so what we're looking for is this right here, this total return of 11%. Okay, so what we're going to do is we're going to do 11%, okay? And then what we're going to do is we're going to turn off the dividends. So reinvest the dividends off, okay? And then it puts it at a 7.9. So then what we're gonna do is we're gonna do subtract 7.9. And so that means our dividend yield is 3.1%. So we're gonna go back into the calculator, the dividend yield, 3.01%. And then going back over here, just reconfirming, okay, the capital appreciation without the dividend, because the total return, guys, is capital appreciation plus the dividend reinvested. You combine those two together, that is your total return, okay? Pretty straightforward. And so the capital appreciation on this investment since inception, back in January 2015, you have an annual return of 7.9%. So you'll do 7.9%. And the dividend growth, where are we going to get that dividend growth? So in order to get the dividend growth, you go over here to Seeking Alpha and you want to look up the dividend growth. Well, the 5-year dividend growth of this one right here with SCHD is 12.88. And then you take the DGRO dividend growth of 9.3 plus 9. And so then when you combine them, and then because this is a 50-50 portfolio, you divide that by 2 and your dividend growth is 11%. Okay. And so that's how we got the 11%. So with using Portfolio Visualizer, if you have a portfolio of multiple stocks instead of just 1 or 2, it makes it a lot easier to capture your portfolio capital appreciation, your portfolio dividend growth, your portfolio dividend yield. And then the dividend growth is going to be a little bit more manual. You'll have to go and do that and find that yourself. One way that you can do that it's pretty fast is what I do. Let me show you this. I didn't prep this, so I'm doing this kind of on the fly here. If you go to your portfolio and you go under the portfolio view, and then from here, what you can do is you can go under dividends and then you can go under, let me see if I can find it, dividend growth right here. So you can see dividend growth of all of your holdings right here. And then what you're going to want to do is you're going to want to, equally weight them based off of how many, shares you have in your portfolio. And yeah, that's I guess the heavy lifting part is getting the dividend growth if you have more than just a handful of ETFs or stocks. Like you can do one portfolio for free, if I'm not mistaken. You just go in here, you create a new portfolio, you can link your brokerage. You could, like, for example, if you have M1 or Fidelity or Robinhood or whatever, you can just sync your portfolio for free. It's pretty cool. And if you want to do multiple portfolios, you do need Seeking Alpha to Premium to do that. If you want to sign up to Seeking Alpha Premium, you can check out my link in the description below. You will get a better price using my link. But yeah, that's how you can find the data around the dividend growth in a pretty seamless, quick way. Okay, now coming back to the dividend calculator. This is where it gets really, really exciting. Okay, so what we're looking at here is we're taking the assumption that you have $10,000 in your account. If you have $20,000, $100,000, or $2, it doesn't matter. It's all relative to you. That's how you put your initial investment. Then what you're going to do is you're going to put in how much are you investing every single month. Let's say you're investing, $1,000 a month. Let's say you're investing $1,000 a month. Well, if you're investing $1,000 a month in the simple path to wealth with dividend investing, nothing else, just these two ETFs, this is what you can reasonably assume. Now, you might say, well, Jake, this has been the numbers from the greatest bull market in history. There's always some smart ass in the comments that always says that. Well, Jake, you're using numbers from the best bull market in history. Like, okay, all right, calm down. I hear you. I kind of agree, but calm down. So what you can do is, if you wanted to be ultra conservative, you can say, all right, instead of 11%, I'll say 10%. Instead of 7.9, I'll say 7%. Like, whatever you want to do, I'm going to keep the historical numbers, but you can be more conservative if you want. Okay, so don't rush to the comments and tell me that I've been living in the greatest bull market in history. I'm aware of that. It's okay. Okay, calm down. Anyways, let me walk you through and show you what this looks like in terms of your portfolio income. So if you're investing with these parameters, $10,000 and then $1,000 a month, in the first 5 years, you're going to generate $3,000 a year. Not very much money in terms of, in 5 years. But you don't see the snowball really kicking in until later on with this type of portfolio. This is not a high dividend portfolio, guys. Just using these parameters, in 20 years, your portfolio would generate about $50,000. And then in 30 years, your portfolio would generate $250,000. And the benefit of this is it's very tax efficient if this is in a taxable account. Say you're 20 years old and you want to retire at the age of 50. Well, at the age of 50, if you're investing in the simple path to wealth, you could reasonably assume, historical performance is never guaranteed future performance, but you could reasonably assume something to this effect with those parameters. Now, these are the levers that you have to pull. So let's say, for example, you are a rock star and you have a great job, you have low expenses, you live with your mom in your basement and you scream at her for meatloaf. Ma, the meatloaf! Anyways, I had way too much caffeine. I'm in too good of a mood today. Anyways, let's say, for example, you were a rock star and you did $3,000 a month. I know this is not feasible for everyone, but let's say you're a rock star. Okay. Well, if you're doing $3,000 a month, $36,000 a year, well, the equation looks entirely different. In 5 years, you're making $8,000 a year. In 20 years, you're making $140,000. And then in 30 years, I don't even know how my brain can't comprehend this, but you're making over $700,000. Okay. If this doesn't make your jaw drop, I don't know what does or what will. Okay. So this is how you look at this. Okay. And now this is where the equation comes in and says, well, Jake, I'm 55 years old. I need income today. Well, the equation changes. Instead of having SCHD and DGRO alone, well, maybe you do 40% SCHD, 30% DGRO, and the other remaining into high dividend ETFs or stocks, right? Like, those are the levers, right? So the satellites are what helps you. You've heard me say this millions of times. I hope that if you follow the channel, this is where you get that light bulb, is your satellites are where it helps you reach for yield or growth depending on what your situation is. If you need more yield, well then yeah, you dial back the DGRO and you allocate more to a higher dividend investment, like a SC, like a JEPI or a JEPQ, or, if you're into Sin stocks, an Altria Group, or maybe like an AbbVie, a pharmaceutical, or something where you're going to get a higher yield. Okay. So that you can increase your yield, but it's a lever, right? You increase the yield, you're going to decrease your growth, and you're potentially going to decrease your capital appreciation. And so that's where, going back to this is where it can be so powerful. Let's say, for example, you did exactly that. Let's say you did 40-40 and 20% into, let me change this up. Let's change this to JEPQ. Now the data is not going to be really representative because it's a newer ETF, right? So January 2023, that's nothing in terms of historical performance. So I would not really rely on this, but what you could see is, let's do this really quick. Let's say you reinvest the dividend. What is that? Let's do this together really quick. So let's take the 14.7. This is, once again, 40% SHD, 40% DGRO, and 20% JEPQ. And then if we take away the dividend reinvested, what is the actual performance? Subtract 9.4. Okay, so let's do this in the calculator together. I did not prep this, so let's see if this works. So the dividend was 5.03. The capital appreciation was what? 9.4? That's huge. Is that real? Well, JEPQ has been crazy. It's gone up a massive amount. So I would take this very, very much with a grain of salt. But let's just say, for example, the dividend growth went down 8%. Let's say 7.5%, right? So let's say there's no growth from JEPQ or you use JEPI. Now, and let's even be more conservative. Let's say this is 4.5. And let's say that this is 8.5, right? Let's be more conservative, okay? And so if we're using these assumptions, still the $3,000 a month, so we're still assuming you're a rock star, and we use these assumptions, you're gonna see here that the portfolio, you're gonna have higher income in the earlier part, but that snowball dramatically slows down. And you see here, before we had 700,000 in 30 years. In 30 years now with this portfolio, it's cut in half. Now, you've heard me say a million times on my channel, don't invest into covered call ETFs if you have a long-term time horizon. Well, guys, this is kind of what I'm talking about. This is why you don't invest into covered call ETFs. Now, this is just a broad, maybe not the best example, and it's not really based off of any true historical performance because we're only looking at 1 year's worth of data or 1.5 years worth of data with one single covered call ETF. But the point still stands. When you play with these numbers, when you decrease the dividend growth, and you increase the yield, you change the equation entirely. And so this is why it's so important to understand this. But did you just see how long it took me? It took me 60 seconds to capture the data for this scenario. Okay, now it's going to take you a little bit longer if you have 20 or 30 individual stocks. You're going to want to use a weighted average calculator to calculate your weighted average portfolio dividend growth rate, ideally using Seeking Alpha, right? That's how you can get the information the easiest, in my opinion. Or maybe there's other tools out there. I don't know. But that's where your heavy lifting is going to take. But this is not hard to do, and it's a way to look at this. So that's the one example with with reinvesting the dividends and, adding additional money to your portfolio. Okay, yeah, let me use these numbers right here. I want to use the simple path to wealth, but I want to do it with where you're living off the portfolio today. Now, assume that you have $1 million today and you're retiring tomorrow. If we take the numbers from a 50% portfolio of SHD, 50% into DGRO, you're no longer reinvesting the dividend and you're no longer adding new money to the portfolio. What will your portfolio income look like? Well, in 5 years, your portfolio will generate, so in the year one, your portfolio will generate 30,000. In 5 years, it'll generate 46,000. In 10 years, 77,000. In 20 years, 219,000. And then in 30 years, $620,000. Okay, so this is with SCHD and DGRO. Now, I would not recommend this if you are 55 or 60, right? I think having 50% in a DGRO is too much, unless you have a lot of money. Now, if you're in your early, late 20s, early 30s, 40s, I then think, yeah, having a 50-50 DGRO SHD could definitely make sense because you're going to live a very long time. And maybe you need 1 million, maybe you need 2 million, maybe you need 3 million. I don't know. That's kind of the lever that you have to pull. Maybe you need 3 million, right? Okay, if you had $3 million, obviously it's just going to times it by 3. But that's what it's going to do is you're going to have the equation changes, right? So that's really what it comes down to. And now let's use the other example that we did earlier with the JEPQ example. Now I'm going to have to see if I can remember it, but I think it was like 4.5%, 7.5%, and I think, didn't we do like 8% or something like that? I think we did, or did we do 7.5? I think we did 7.5. I think somewhere around there was like the JEPQ example. I can't remember exactly. So using these assumptions, if you did 40% SCHD, 40% DGRO, and 20% JEPQ, and if you were to retire tomorrow and you had $1 million, this is what your portfolio would look like in terms of the income. So in year one, you'd have $45,000. In year 10, you'd have 86,000. In year 20, 178,000. And in year 30, $366,000. So this is what it can look like and how you can kind of visualize how the income is going to look in terms of year 1 versus year 20 or year 30, whatever. So you want to play with the numbers, and how you get this to work, okay, guys, is you can change your dividend yield. You can add more covered call ETFs. Yes, you can do that. You can manipulate the dividend growth high or low, depending on what you have in there. You can manipulate the capital appreciation up or down, depending on what you invest in. These levers you absolutely can control. Now, if you can't get the desired income by maneuvering this in a conservative way where you can still sleep well at night, well, you really only have one other option. And the only other option really is the most obvious and the one that people don't want to hear. It's this right here. If these don't work, you either need to decrease your expenses or reset your expectations for your retirement, or you need to invest more. You need to delay your retirement another year or two or longer so that you can reasonably make everything work out. These are all the levers that you have to pull from, and you have to make it work. And so if this doesn't work with $1 million, maybe you need $1.3 million or $1.4 million. Or maybe you don't buy that new BMW and you maybe drive an older car or whatever it may be. That's the way that you look at this. And this is the tool, the dividend reinvestment calculator, that you can use to help you, to walk you through this. Now, what I would encourage you to do, everybody, this is a really cool exercise. I did this a few years back, is figure this out and then go and share it with your partner. If you're married, you're in a relationship, go figure all the numbers out and then sit down with your significant other and walk them through this. And then look at their jaw drop when they see the income grow exponentially in 20 and 30 years. That's what I did with my wife. I mapped this all out for her and I showed her, hey, this is what it could look like. It's not a guarantee, but it's pretty conservative. This is what it will look like. And I remember my wife being like, what? And just astonished by what she was looking at. So I hope that this video was helpful. I hope it gives you a new perspective of how to think about this. You know, guys, I said at the beginning of this video, it's kind of a nerdier video with numbers and percentages and all that good stuff. I hope that you get excited about that kind of stuff. If you're not excited about the nitty gritty of trying to build your dividend portfolio, that's why I think keeping it simple, the simple path to wealth with dividend investing, can really help you. It really streamlines the entire process, and you're not sacrificing for quality. You're getting some of the best companies in the world by investing into high quality, low fee dividend growth ETFs like SCHD and DGRO. But yeah, I hope the video was helpful. I hope that you learned something new, and I'll see everybody in next week's video.
Please subscribe. Please subscribe.
You know what? I think we're gonna be friends. Can everyone say hi to my friend? That's crazy. I just wanted to say thanks. I'm glad you came along, partner.